3 years ago, I started this stock portfolio with only $217 in my bank account. Now, I have over $130,000, all without having a finance degree or working in Wall Street once. Now, how the fuck is that even possible? Well, in this video, I'll show you exactly how I went from knowing absolutely nothing about investing in stocks to completely crushing my financial goals, to making my little portfolio one of the most profitable ones compared to my investment buddies. But for you to understand how I got here, we've got to rewind a bit. In my second year in college, I knew that working a full-time 9-to-5 just wasn't going to be enough. I needed to find a way to make some extra money without sacrificing an extra hour of my time at work. So in my head, I knew exactly what I wanted. Work on my own schedule, provide real value, and make a boatload of money from it. And I wasn't going to do that by preaching how to milk a cow from some boring office. My goal was clear, but I had no idea how to get there. So I did some research and I found out about this thing called investing. I saw some companies were actually getting a crapload of attention in the media, and stupid as I was, I thought a lot of press coverage meant there were great companies to buy. So I opened up a brokerage account, and to my surprise, a couple days later after buying some stock, I was actually making a couple dollars. And my dumbass thought I was going to get rich by just watching what was hot in the news. But it turns out watching the news doesn't mean jack when you're buying stock. So as you can probably guess, I started losing money. All that effort for nothing. These TV shows are a scam. Why would I even spend time watching that crap? So I went back to work. I started looking for information on how to find valuable companies. And back then, education was so hard to come by, so I hired an investment advisor to teach me. I went ahead and found a mentor and practiced with paper trading. Literally everything. The rest is history. So after watching this video, you'll have the exact blueprint I used to create this portfolio you're seeing right now and every single details on how things run at the Basquiat Capital office. So buckle up. Let's get to work. So here's where things started to change for me. After getting burned by the news hype, I realized something. The stock market isn't just about who works the hardest. It's about who knows what at the right time. And that's called information asymmetry. When one side of a deal has more knowledge than the other. And let me tell you, in investing, the people who win are the ones who see what others don't. Let's break it down. Have you ever bought a used car or a used anything? The seller knows everything about that item, for example, if it's a car, how it drives, the hidden issues, the accidents it's been in. But you're just hoping it's a good deal. Unless you do your homework, you're playing blind. And guess who wins in that situation? It's definitely not you. Same thing happens in real estate. The person selling a house knows why they're selling. Maybe there's a leak in the foundation. Maybe property taxes are about to skyrocket. If you don't know that, you might overpay. Now here's why this applies to stocks. Big hedge funds and billionaire investors don't just read headlines. They have teams of analysts, private data, and connections inside companies. They know what's really going on before the public does. And the average investor, they're just getting leftovers. When a stock is all over the news, hyped up by analysts on TV, that's usually because the big players already bought in it at a much lower price. By the time you hear about it, they're selling, taking their profits, or you're left holding the bag. Now that's exactly what happened to me in the beginning. I was chasing hot stocks, buying what everyone was talking about, thinking I was ahead of the game. But in reality, I was always late. So how do you flip the script? You stop reacting to the news and start getting ahead of the curve. Here's 3 ways how. First, you've got to find information that others aren't looking at. Instead of chasing headlines, study actual business fundamentals. Look at financial reports. Check investor presentations. See how a company makes money. Second, follow the smart money. Track what the biggest, most successful investors are buying before it hits the mainstream. Websites like the SEC Edgar filings show what billionaires like Warren Buffett are holding. Third, look where no one else is looking. The best opportunities aren't on CNBC. They're in industries people overlook. Companies quietly growing their revenues before they explode. Take Amazon. Back in 2001, it was just an online bookstore. The media wasn't hyping it up. Analysts thought it was just another .com company. But if you actually look deeper at what they were building, their logistics, their customer obsession, their early move into cloud computing, you would have seen the future before everyone else. If you and I, had invested just $1,000 in Amazon back then, today we'd be sitting on over $2 million. But I was just a chill teenager playing PlayStation back then, so whatever. So here's the game plan. If you want to win in investing, stop playing the same game as everyone else. The key isn't working harder, it's knowing more than the average person. Read annual reports. Follow smart investors. Look for businesses quietly getting stronger while everyone else is chasing hype. Once you start seeing the market before the crowd does, that's when you start making real money. Now that we've got a better understanding of one side of the competition, it's actually time to get to know the other side of it. Now, here's one important thing for you to take away from this video. This other side is literally where 90% of investors are stuck. And the worst part is no one cares if they stay there or not. You see, most investors don't actually think for themselves. They don't analyze companies. They don't research market trends. They just follow the crowd. If everyone else is buying, they buy. If everyone else is selling, they panic and sell. And this is called herd mentality, and it controls market sentiment. Nowhere was this more obvious than in the epic GameStop saga of 2021. If you weren't paying attention, here's what happened. A guy named Keith Gill, also known as Roaring Kitty, saw something that almost no one else did. While the rest of Wall Street had written off GameStop as a dying business, Keith noticed something different. He dug deep into the company's financials and realized something crazy. Hedge funds had shorted GameStop stock into oblivion. Translation, these hedge funds were betting against GameStop, assuming the price would crash even further. But if the stock went up instead, they'd be forced to buy back shares at a higher price, causing a massive short squeeze. Keith posted about this on Reddit, subreddit Wall Street Bets, and at first, no one believed him. But then, a few people started looking into it, then a few more, and suddenly GameStop price started rising. That's when herd mentality kicked in. People saw the stock skyrocketing and didn't want to miss out. So more and more traders piled in, buying shares like crazy. Social media blew up. News headlines were all over it. Robinhood traders were FOMO buying GameStop with no clue what was happening. At one point, the stock went from $4 to nearly $500. See, stocks don't move just because of business fundamentals. They move based on market sentiment, how people feel about a stock. And in 2021, the sentiment around GameStop wasn't about earnings or balance sheet. It was a war. On one side, the hedge funds, trying to crush GameStop to make billions of dollars. On the other side, retail investors pushing back, driven by belief that they would beat Wall Street at its own game. And because of this extreme sentiment shift, GameStop became the ultimate example of how herd mentality can move markets. Now, most people jumped in pretty late. They saw GameStop soaring and thought, this is going to the moon. But by the time they bought in, the hedge funds had already started covering their shorts and the price came crashing down. Hundreds of small investors lost thousands of dollars because they were just following the hype and not thinking for themselves. And as you watch this video and you're looking for an important takeaway, it's this. If you want to make real money in the stock market, you can't just follow the herd. By the time everyone is talking about a stock, the opportunity is usually already gone. Instead, you need to either be ahead of the sentiment shift, like Keith was, or you become the chill guy and wait on the sidelines. Because if you're following the herd, you'll always be the last one in the hype and the first one to lose money. Anyway, if you like the video so far, go ahead and smash that like button and leave a comment to spam the algorithm. It really means a lot to me. Okay, now we've seen how herd mentality and market sentiment can make or break investors. But here's the part no one tells you. Sometimes the market isn't moving because of real demand. It's moving because someone is pulling the strings. So a couple of years ago, this was damn near literally impossible to know without spending a bunch of money. But with how crazy information is democratized today, we can get this information in a few minutes. I did some research and found that big players, hedge fund managers, market makers, and even financial media, they all have tools to move stock prices in their favor. And if you don't know what to look for, you're playing a rigged game. So you might be asking me how they do it. Well, here's 3 ways I found they commonly use. The first is crazy rampant, especially now with AI, and it's fake news and misinformation. Have you ever noticed how stocks suddenly crash after a negative news article? Sometimes that news is planted, designed to scare small investors into selling. Once the price drops, the big players swoop in and buy at a discount. Another one big players use are pump and dump schemes. A stock gets hyped everywhere. Social media, YouTube, even mainstream news. People rush in to buy. They drive up the price, but behind the scenes, the insiders who started the hype already started selling their shares, leaving regular investors holding the bag again. A more recent example of this scheme is with the 47th president of the United States meme coin, aka the Trump coin. The third and last one is short attacks and bear raids. This is when hedge funds deliberately tank a stock to profit. They flood the market with negative press, place huge short bets, and sometimes even manipulate orders to make it look like there's panic selling, forcing small investors to panic sell for real. Now, this is something that happened with Tesla back in the early days. It happened with GameStop when hedge funds tried to crush it, and it happens every single day in the stock market. So how do you protect yourself? The only way to win in a game like this Learn the rules. Ignore hype and fear-based news. If a stock is crashing or soaring for no fundamental reason, take a step back and ask yourself why. You can also watch what smart money is doing. Billionaires investors don't follow the herd. Track their moves. Lastly, have a strategy and stick to it. Don't let market manipulation push you into bad decisions. Have a plan before you buy or sell. The stock market isn't a fair game, but it's a game you can beat if you know how it works. Anyway, there you have it. These are the most important things to know to help you start investing in 2025. Without knowing these crucial things in any kind of investing you're trying to do, you're going to fail. One of the things I've done that took thousands of dollars and hours of time was to compile all this into one valuable resource that you can consume in under 1 week. It's completely free as well, and you can find it in the description below. Drop a like and a comment if you found this helpful, and make sure to subscribe to my channel. If you want to get started with my free resources, go ahead and check out the links in the description that I mentioned, and this won't cost you a single penny. Now, I got more game for you to level up your money, so check out this other video here or here, and I'll see you there.